those are kind of significant when you look at them is because they are somewhat different than what the trade was expecting and what the USDA had said before. Previously, you might remember that going back to the March 31st Planting Intentions Report, we had USDA saying we would have 88 points of average trade guess. You know, we had a very nice spring planting conditions over a broad area of the Midwest. Maybe not so good in some areas there, but better than last year. In general, better than last year, because last year was pretty much a disaster from wet weather all the way through the spring, and yet we had an abundant crop. You can see that we had the analysts guessing all kinds of range. They always put in all kinds of numbers, and you can see that the lowest estimate they had was 88. You have a crop report that comes out 87, 87. It's below the lowest guess of analysts. It's below the analyst, it is above what the acreage was last year. But when traders are looking at what they expected and how you can see that this was the potential for a big surprise if there wasn't something else to mitigate that bullish number. When you go down here, when we're talking about the corn stocks number, when the stocks on hand, 4.31 billion bushels, you can see that the average trade guess expected more than that, about roughly 300 million acres more corn are in storage somewhere. And you can also see that the average guess, the lowest average guess, is the number USDA came out with is well below that average guess. So there are a couple of possibilities here, and that is that the from last year and at the end, maybe there wasn't as much corn. People didn't think there was quite a crop, but maybe there wasn't as much corn produced as you had expected, even though the animal numbers have been declining a little bit. So there are a couple of things here that the stocks report did not offset the effect of the acreage, and so you had a situation where you lead to some bullish considerations all the way around. Now, when we get to the fundamentals that we're talking about situations that, if you follow the market very much and you look at the numbers and you try to determine how does it compare historically and what are people thinking about, it's kind of a bit of a surprise sometimes when they do occur. But what we're going to do is we're going to look at the numbers in terms of how they will look on a chart and what we're going to do about it. Now, the software I'm using here is Vantage Point Intermarket Analysis software. And what I'm going to do is to use some of the indicators provided by Vantage Point to come up with a trading plan, or at least some kind of a way to treat these numbers as they come up and after they are announced. A couple of things about Vantage Point I should mention. First, I am not a salesman for Vantage Point. I don't try to sell any product or get any money for any product sold. I am interested in developing trading strategies and doing some trading myself, trying to analyze the number using some software, and I find Vantage Point to be a helpful tool to do that. About the Vantage Point data, it is based upon intermarket analysis. It's a neural network process that Vantage Point uses to determine the markets that are most likely to influence a target market. You can imagine when we're talking about, if we were looking at the corn market as we are here, that you're going to be influenced by what happens in wheat or soybeans or other crops. You're going to be influenced by the number of hogs. A lot of different kinds of things are going to influence what happens to the corn price, kind of a background effect in there. So Vantage Point takes all of these into account, comes up with a set of intermarket data that they can use for the predictive indicators that Vantage Point has. The predictive indicators also, just to point out, they are based on, or for the most part, based on typical prices, which is the average of the high, the low, and the close. A lot of analytical software you see will only use just that one price per day, and that's usually the close. But when you include all the prices and you get the range in there, the high, the low and the close. It's more get better representation of what is going on within that market. So that's what we're going to be using as the Vantage Point intermarket analysis software to take a look at how we might set up for the future if we want to trade. What I have on the screen here, you will see a 6-month chart of corn. One thing you might want to point out initially right here at the first bar where the cursor is, where this big black bar is, as I mentioned, we maybe had the corn crop being overestimated in January. This bar is, or this candle is on the date of January 12th when the USDA came up with its final production figures for 2009. And as a result of those numbers, the market kind of plummeted, and maybe that's not the way the real situation was. Maybe the crop, maybe it wasn't there, maybe it wasn't that size, that large. But we're going to take a look and see what we have on the chart here. Okay, now we're going to go back here and let's see here, talk about the what we have on the chart and how we use the indicators on the chart. The couple of the indicators that we're going to be talking about in Vantage Point are going to be related to what are common, I would say, because we're going to be using moving averages, which everybody is probably familiar with, but we're also going to be using a couple of other things about comparing moving averages with each other and helping to develop some short-term forecasts based upon that. The case that we have here that we're going to be using is the Vantage Point's predicted moving average. That's the blue line that you see on the screen there, the blue line that goes across there, and you'll see that the blue line kind of wiggles and waggles, but the clear trend that you can see, the primary trend you would have to say in corn, going into the end of this month, into the 1st of July and the last half of the year, has been generally down from the first of the year. So let's talk a little bit about some of these indicators and what they were going to talk, or what they're going to show us, and whether we can use them to then define some entry points that we want to use in our trading. The first indicator, as I mentioned, we have is the predicted moving average. That's that blue line versus the black line. The predicted moving average is going to be, let's see, I've got a little glitch here. Let me get back here and see if I can't pick it up. The predicted moving average is going to be a little shorter moving average than the actual moving average, and that's by intent. And so we're going to try to explain how to use that in connection with several other Vantage Point indicators to determine exactly what we want to do when a key report is coming up and how we might be able to prepare for that report. We have on the screen now, you can see that we also have a couple of other indicators at the lower panel. The predicted moving average, first of all, is, as I